Another day, another story. Maximizing your first home savings account, FHSA, in Canada. Welcome to Forum Finanzia, the channel where we decode finance for you. Today, we're diving into Canada's newest financial tool, the First Home Savings Account, or FHSA. If you're dreaming of buying your first home, this video is a must-watch. Don't forget to hit the subscribe button for more financial insights. Introduced in 2023, the FHSA blends the benefits of a tax-free savings account, TFSA, and a registered retirement savings plan, RRSP. Let's break it down. Eligibility and contribution limits. To be eligible, you must be a Canadian resident and a first-time homebuyer. The FHSA boasts an annual contribution limit, e.g., $8,000 in 2023, and a lifetime limit of $40,000. Key questions answered. 1. Basics and eligibility. What defines a first-time homebuyer, and what are the age requirements? Home ownership status. A first-time homebuyer is typically someone who has not owned a home in the year of opening the FHSA and the 4 preceding calendar years. This means if you're planning to open an FHSA in 2023, you should not have owned a home since January 1, 2019. Residency requirement. You must be a resident of Canada at the time you open the FHSA and when you make your withdrawals for the home purchase. Minimum age. You must be at least 18 years old to open an FHSA. 2. Contributions. Annual contribution limit. In 2023, the annual limit was set at $8,000. This limit is subject to change in subsequent years based on government policy. Lifetime contribution limit. As of 2023, the lifetime contribution limit was set at $40,000. Carry forward mechanism. As of the latest information available up to April 2023, the FHSA did not allow for the carry forward of unused annual contribution room. Annual contribution room reset. Each year, your contribution room is reset to that year's annual limit, regardless of how much or how little you contributed in the previous year. 3. Tax deductions. Are contributions made within the calendar year tax deductible? Yes. Contributions made to a first home savings account, FHSA, within the calendar year are tax deductible in Canada. Calendar year contributions. Contributions to an FHSA that are made during a calendar year, from January 1st to December 31st, can be claimed as deductions on your income tax return for that year. Contribution limits. The annual limit is $8,000. You can only claim a deduction for up to $8,000 in contributions for that year. Subject to change. Tax planning. This feature makes the FHSA a valuable tool for tax planning, allowing individuals to save for their first home while also reducing their annual tax burden. Timing of contributions. To take advantage of the tax deduction for a specific tax year, you must ensure that your contributions are made within that year. Contributions made after December 31st would count towards the next tax year's deduction. 4. Investment options. What types of investments can you hold in an FHSA? The types of investments you can hold in a first home savings account, FHSA, in Canada are similar to those allowed in other registered accounts like the tax-free savings account, TFSA, and the registered retirement savings plan, RRSP. Typical investment options generally include cash, guaranteed investment certificates, GICs, bonds, mutual funds, exchange-traded funds, ETFs, stocks, savings accounts, segregated funds, income trusts, and mortgage-backed securities. 5. Withdrawal rules. What happens if you withdraw for non-home buying purposes? Taxation on withdrawals. Withdrawals from an FHSA that are not used for qualifying home purchases are subject to taxation. The amount withdrawn will be added to your income for the year and taxed at your marginal tax rate. Loss of tax advantages. One of the key benefits of the FHSA is the ability to withdraw funds tax-free for the purchase of a first home. If the funds are withdrawn for other purposes, this benefit is lost, and the withdrawal becomes a taxable event. Potential penalties. Depending on the specific rules set by the Canada Revenue Agency, CRA, there may be additional penalties or fees for non-qualifying withdrawals, similar to other registered accounts like RRSPs. Impact on contribution room. Unlike the TFSA, where withdrawn amounts are added back to your contribution room in the following year, it's unclear if the FHSA will operate in the same manner. Account closure. Depending on the regulations, Non-qualifying withdrawals might lead to the closure of your FHSA account. This would mean losing the future tax benefits associated with the account. 6. FHSA versus HBP. Can you use the FHSA in conjunction with the homebuyers plan? It is possible to use both the HBP and FHSA for the same home purchase. This would provide a larger pool of funds for the down payment or other home buying expenses. 7. Non-home purchase scenario. What if you don't end up buying a home? If you open a first home savings account, FHSA, in Canada and do not use the funds for purchasing a home, the following scenarios apply based on the FHSA rules. Maximum participation period. Your participation in the FHSA is limited. The account must be closed by the earlier of the 15th anniversary of the account's opening, when you turn 71 years of age, or the year following your first qualifying withdrawal from the FHSA. Transferring funds. Before the end of the maximum participation period, you can generally transfer any property in your FHSA on a tax-deferred basis into your Registered Retirement Savings Plans, RRSPs, or Registered Retirement Income Funds, RRIFs. This allows you to continue the tax-advantaged status of your savings. Taxable withdrawals. If you withdraw any remaining funds as a taxable withdrawal, this amount must be included as income on your tax return for the year the amounts are received. Property remaining after participation period. If any property remains in your FHSA after the maximum participation period ends and the account loses its FHSA status, you must include the fair market value, FMV, of all the property in your FHSA as of the end of December 31st of that year as income on your tax return for that year. 8. Government incentives. Are there additional incentives for FHSA holders? Tax advantages of FHSA. Contributions to the FHSA are generally tax deductible, which can reduce your taxable income. Additionally, withdrawals made from the FHSA to buy or build a qualifying home are tax-free. Combining FHSA with the Homebuyers Plan, HBP, you have the flexibility to withdraw from both your FHSA and your RRSP under the HBP for the same home purchase, provided you meet all the conditions at the time of each withdrawal. First-time homebuyers tax credit, HBTC. In addition to the FHSA, first-time homebuyers who acquire a home can claim a non-refundable tax credit of up to $1,500 through the HBTC. GST, HST New Housing Rebate. This rebate is available for new home purchases and can help reduce the upfront costs associated with buying a home. Strategic use of the FHSA. Start early. Open an FHSA as soon as you're eligible and start saving, even if your home purchase plans are in the distant future. Maximize contributions. Aim to maximize your annual contributions to benefit from tax deductions. Invest wisely. Choose investments within your FHSA that align with your risk tolerance and time horizon. Coordinate with other accounts. Use your TFSA and RRSP in conjunction with your FHSA for a holistic saving strategy. Comparing FHSA, TFSA. While each of these accounts offers unique benefits for saving towards a home, their suitability depends on an individual's financial situation, goals, and the timing of their home purchase. The FHSA offers specific advantages for first-time homebuyers, but its use is more restricted compared to the flexibility of a TFSA. The RRSP-HBP provides a way to leverage retirement savings for a home purchase but requires repayment. In contrast, TFSAs offer great flexibility and tax-free growth, but without the upfront tax benefit of the FHSA or RRSP. Conclusion. The FHSA could be your key to homeownership in Canada. Start early, maximize contributions, and invest wisely. And always, tailor your strategy to your personal finance journey. Thanks for watching, and see you in the next video. Thanks for watching.